people that have joined live to listen in to our about bi-monthly show that we've been doing where we are highlighting different local and impact investment funds where regular people can put their money into their own communities and into the causes that they care about. And so really excited today because we're going to get to talk with Olivia Watkins of the Black Farmer Fund, who has been doing tons of great work all across the Northeast, and we're going to get to really have a great discussion with her about that. We are going to take Q&A from the audience. Looks like we've got our biggest group yet today, so that's awesome. So if you have questions throughout, go ahead and put those in the Q&A. There will be a time at the end where I'll filter through. And if you like someone else's question, give it a thumbs up, give it a like so that we can make sure that that one gets asked. But first, I want to make sure that we hit on our partner organizations and on our panel that will be part of our main discussion here today. So, partner organizations, first and foremost, we've got, let's see, the Main Street Journal, which is the hub for all local investment, really the best place for locally focused investment opportunities. We also have Neighborhood Economics, which convenes impact investors and the communities who are most needed to receive that impact investment. We also have Eagle Market Streets Development Corporation, who has their own fund that is community impact focus. We have Impact Alpha, who is kind of really the main Wall Street Journal for impact investing. And we also have the Mindful Marketplace, which is my show on bizradio.us, are all of our partner organizations. Now, our panel, we've got Michael Schumann, who is the author of several books on local investing, including Put Your Money Where Your Life Is. He is the editor and chief of Main Street Journal. We have Kevin Jones, the co-founder of SoCap Conference, as well as the co-founder of Neighborhood Economics and other Impact Hub co-working spaces and other accolades there. We also have both Stephanie Swepson Twitty and Jasmine Francesca from the Eagle Market Streets Development Corporation. So that's our panel. Those are our partner organizations. So let's get into it. Olivia, first, thank you so much for being here today. We're so glad to have you.
Thanks for having me.
Yeah, so the first question I have is, the Black Farmer Fund. It seems like a really fascinating project, but I would like to know from the beginning, how did this actually start? What was the soil that birthed this new, this kind of new growth that became the Black Farmer Fund?
Yeah, so this actually started from personal experience that I had before Black Farmer Fund. I was a farmer and I worked on small regenerative farms. And then I also had my own farm project where I was doing agroforestry on my family's land. And as I was doing that work, I was, looking to expand my mushroom log operation and began the process of becoming more of an investor relations person than a farmer. And so I would, go to banks, traditional lenders. I would also go to, farm lenders. I would apply for grants and I either wasn't getting through the process because people didn't know what agroforestry meant, or I was too young, didn't have enough history, or the grants weren't enough to be able to capitalize my needs. And I started going to other conferences and started talking to other farmers, especially other young BIPOC farmers, and realized that there was broader systemic issues that were at play, not only with access to capital, access to technical assistance, and a lot of these systemic issues have stemmed from decades of discrimination. And so, seeing this at play and experiencing it myself, I wanted to be able to participate and contribute to something that would help people on a larger scale overall, rather than just myself. And I met my co-founder, Karen Washington, who's a farmer herself, and she does a lot of urban farm advocacy work. And we started meeting with the Black farming community to have conversations and understand more about what are the issues around access to capital. So that's my personal, why for being in this work. Although I don't farm full time anymore, I live vicariously through all the farmers and food businesses that we work with. But for me, it's really about being able to close the racial wealth gap in the food system.
Yeah. So I guess then that sets up, kind of what was the problem that you recognized that really kind of led to you saying, like, we actually need a fund to be able to do this work and continue our goals.
Yeah, so when we initially started the organization, we looked at a lot of the USDA research and particularly looked at some of the financial numbers. So when you look at net cash farm income, for example, in the 2017 numbers, Black farmers were making around negative $906, while other farmers were making 42,000. And that was a really stark difference that we saw across the Northeast in different forms. And that was really surprising to us to see that those numbers. The other thing that we saw at play was that, okay, for the financial institutions that exist that say that they're serving Black farmers and food businesses, what are the issues within those spaces? And the main thing that we found as well was that the people who are on the ground in the community didn't have positions of power in some of these lending institutions. So for example, a lot of the investment committees that you see oftentimes have a heavy focus on financial professionals and investment professionals, but there are no community members who are on those investment committees. And so what's lost is a lot of the nuance of what's happening on the ground and how people can be more informed in making decisions. So the problem of the racial wealth gap and then also the issue of power and the consolidation of power and how money gets distributed were two things that we're trying to address.
Yeah, that's fantastic. I have plenty of other questions I could ask, but I want to take a second to kick it over to if there's anyone on the panel that's got something that there's jumping out to them. I'd like to kick it to y'all.
Yeah, let me jump in. So Olivia, great to have you here, and maybe to just give everyone a sense of some of the numbers around the fund, the size, the number of farmers and other related businesses you've been able to mobilize capital to, the typical size of the capital, stuff like that. That would be a really good point of orientation.
Yeah, definitely. So I'll start off by saying that Black Farmer Fund, we're a nonprofit organization. And within this umbrella organization, we do a couple of different things. So we have different pools of funds. So we do have an investment fund, which we call BFF Fund 2.0. We have a rapid response fund. And then we do programming, where we mainly focus on technical assistance and network building to complement some of the funding that we do. So our rapid response fund, every year we distribute $100,000 to different businesses that have emergencies. And a lot of the emergencies that we see are around climate emergencies, or, for instance, people lose, farm partners or family members, and it significantly impacts temporarily their ability to be able to operate their farm, or they have a tractor emergency. Being able to have some of that, quick mutual aid assistance. And then our investment fund is a larger pool of fund where we have a $20 million fund. And this fund is an integrated capital fund, which basically means that we provide gifts and debt capital. And we raise grants and loans from investors. So to date, we have supported about 12 businesses with about $3 million. And we're actively in the process of continuing to deploy the fund. We've raised about 50% of that fund. The average size in terms of how much we provide through BFF Fund 2.0 varies, but the range is about $250,000 to $1 million. And that will be a combination of a gift and a note.
That's great. Very, very helpful. Do you have a standard package that you're giving to all of the companies you're working with? Like everyone gets a little bit of capital, a little bit of technical assistance and other wraparound stuff, or is everything unique?
Yeah, I would say it's unique. It really depends upon the business. because we are working with a segment of the market that has been traditionally excluded from opportunities. So their problems are very unique and very, very specific and personalized to what they've experienced. But we basically present everyone the different options that we have. So, for instance, if we have different folks who come to us that might not necessarily have all of their, financial statements ready, then, and if they're a mission fit, then we'll support them with free technical assistance, and we'll bring in a consultant to help support them with that to get them investment ready. We have another example of, we just recently did a deal with a grain farm and a distillery, and they already had everything ready. And so it was really about focusing on providing them with the access to capital and then getting them tapped into our network. So that way they can then source directly from Black farmers and other BIPOC farmers in our network.
Let me
So
just
it really
oh,
depends.
go on. I'm sorry.
It depends. Yeah, that's it.
Yes, just one question, and then I'll pass it on to Kevin. One more question, and that is there a way for grassroots investors to participate now? And if not, what are your thoughts about that in the near future?
Yeah, we really, democratizing investing is really important. And especially, with the Jobs Act that Obama ushered in there, that change and, investment regulation, I think has really allowed individuals like myself and like the folks that we work with to really build wealth through investment. So we do have what we call a community wealth building note, where folks with lived experiences are able to also benefit and build wealth alongside our other investors. And we think that it needs this piece of investing when you're thinking about, community investment funds. The focus has, yes, been on making sure that you're able to provide nuanced capital on the ground, but also it should be about involving the community in, participating alongside, larger institutions and high net worth individuals to, participate in that investment. So yes, we do have that option.
That's great. Very exciting. Kevin, over to you.
Yeah, that's really good to hear. Going back, the problem you're working on is the racial wealth gap, which is what Stephanie is working on with the community equity fund that I'm helping with, which is, the 90% of Black-owned businesses that are very small and never get to the fourth employee. And so that's the racial wealth gap. And you saw that power at the table was really where things, the folks with the money and the power didn't know how to listen to the community, and they weren't at the table explaining themselves. How have you addressed that place? You decided that's the inflection point, is to get your voices heard up there at the table where the investors are. How have you addressed that have you shifted power?
Yeah. The main ways that we do that is by are basically the different committees for our Rapid Response Fund and our BFF Fund 2.0. They're filled with community members. And so those community members are the ones who are deciding on which folks are getting the capital. So for our Rapid Response Fund, we have a selection committee, and that selection committee is made of people who are either organizers or farmers or food business owners, and they're making the decisions on who's getting emergency funding. And then the same for our investment committee. It's filled with representatives from each 7 of the 9 northeastern states that we're in. We have, someone who's a chef, someone who runs a farmer's market, a couple organizers, a couple farmers, a former loan officer turned farm educator. And all of these folks are responsible for, making the decisions. And the other part that I think we've benefited from greatly is that because they're connected to what's happening on the ground, they're able to give us feedback as to whether or not the investments that we're making are actually in alignment with the mission of the organization, are actually in alignment with what we say that we're going to do. Mm-hmm. And so it allows for, really responsive feedback that allows the investment team to then take that internally and to adjust or provide more clarity or to shift our process in order to ensure that we're doing what we say we want to do, because I think it's very easy for any organization, even myself being, a farmer and having the lived experience, I'm still very much separated from the work as now
Right.
the leader of the organization. And, similar ways to all my other colleagues who have passions in farming and who really want to do good work, we're not on the ground in those ways. So having, positions of power internally in the organization for community members has been the greatest thing for us, because it ensures that accountability is happening rather than them just being in an advisory role or on like an advisory committee.
Right. But are they in the investment committee also includes, the foundations and institutional investors who are hearing from the community, or is it just community members on the investment committee?
Yeah, we don't have any investors on our investment committee. Our
Okay.
committee is just comprised of community members.
Okay. Thank you. That's really interesting. Stephanie, do you have something you want to add?
I do. I have a question. Thank you, Kevin. I have a question, Olivia, as organization who's strongly committed to building assets and creating wealth. Would ask you to speak a little bit to why you feel strongly, if you do, about maintaining particularly farmland as an asset for building generational wealth.
Yeah. Farmland as an asset for building generational wealth, I think, is incredibly important, because, when you look at, for instance, a lot of fifth, sixth, seventh generation farmers, even, folks that are in the seventh generation farm, but they're a young farmer, they have an incredibly, a significantly easier time being able to navigate the financial operations of their farm business in comparison to, someone who is a first generation farmer and, is coming from an urban environment and looking to buy farmland, but then also needs all this other, working capital and operational expenses in order to get their farm off the ground. And the reality of, farmland currently being so expensive, especially in the area that we work in the Northeast, it's incredibly expensive. And the types of farm businesses that you need to have in the Northeast, just given the geography, require you to have so many different streams of revenue, which create really, complicated farm businesses. And so I would say that it's put especially the community that I work with at a huge disadvantage when you look at the decades of discrimination and a lot of the land that was lost from Black families. It's put a lot of folks who are now interested in coming back to land that might have lost land from their families at a huge disadvantage, because they now have to start from scratch and figure out how to come up with, $900K, $1 million, $2 million on top of, $500K for working capital to get things off the ground. So the land piece is really huge. We work with an organization called Northeast Farmers of Color Land Trust, and they support, not only land maturation and getting land back into the hands of Indigenous folks, but they also support BIPOC individuals with accessing land through land gifts or land acquisition. And so for BFF Fund 2.0, a portion of this, the capital that we have, is going to go towards helping folks secure real estate. And we're going to be collaborating with other partner community investment funds in order to do some of those deals.
Thank you.
Yeah, I love that. I saw on the website the land trust there, and that looks like a really fascinating and interesting partnership you guys have. I'd love to hear more about that. I think we could all benefit from hearing more about that project.
Yeah, Northeast Farmers of Color Land Trust it was started through a group of BIPOC farmers that came out of an organization called Soulfire Farm, which is a BIPOC farmer education program. And the original impetus was to address this land issue, but in a way that wasn't participating in, the speculative land market, where, farmers are being outbid, for example, to access land. and they want to work on not only some of those things that I mentioned, but then also work on building land trusts, land commons, and communal land spaces for farmers to come together on land as an alternative to maybe just one farmer managing land. And they really work in alignment with a lot of the indigenous practices of stewarding land. And so thinking of all of us as land stewards rather than landowners and participants of a broader ecosystem. So the main things that we collaborate with Northeast Farmers of Color Land Trust on are around technical assistance. So they have a lot of technical assistance capacity in their organization, specifically around helping people identify land. So they've helped some of the farmers that we worked with in the past with helping to negotiate leases or helping to look for land. And I think it's really important, and it shows the power of collaboration with other organizations, because our wheelhouse as Black Farmer Fund is really around, working capital, operational expense, and network building. But being able to partner with an organization like Northeast Farmers of Color Land Trust that's shifting, the game to build some of the generational wealth that you're talking about, Stephanie, I think is why we love to work with them.
Yeah. Yeah, I think that makes a total sense why you guys are working together on that. Jasmine had a question. Jasmine, could you go ahead and unmute?
Yeah, so my question was, if any, what barriers of entry did you experience when trying to launch your fund?
Yeah, that's a great question. So at the time of launching the fund, Karen and I began conversations about the fund in 2018, and then we applied for our first operational funding as a nonprofit in 2019 and received that 2020. And this was, before COVID. This was before, the uprisings and, the murders of Black men, and before all of the, turmoil that was happening in the world. And there was, a lack of there was nobody doing what we were doing in this way that we're doing it. We had interviewed and done a landscape assessment of different funds that were funding alternatively, meaning like they weren't looking for, market rate or above market returns. They were, looking at ESG principles, but there was no one at the time who was specifically focused on providing non-extractive capital to Black agricultural businesses. And so the greatest barrier to entry, I think, was that we were creating a lot of what we're doing from scratch. We learned a lot of the different pieces from different partners. Like, for instance, we learned a lot from Boston Impact Initiative, who you all also had conversation with. And being able to then take these different pieces and combine it, and then also come up with different pieces that made sense for us. Like, for instance, our community governance model with our investment committee was a challenge because there was no one to really look to for affirmation on that. And I think it was also a blessing in a lot of ways because it forced us to really rely on getting and ensuring that we had strong community feedback constantly to ensure that what we were doing was actually helpful. And so the other barrier to entry, fast forward to 2020, was there was a lot of external demand for the work, and there was a lot of external interest of providing us access to capital to do the work, which was amazing. And we had been in operation for 2 months at the time when we started getting an influx of capital and requests for support. So there was a lot of building the plane while we were flying, which was a great experience in a lot of ways, and it allowed us to then instill, I guess, a culture in the organization to continue to adapt and shift. But yeah, I think that it was hard for the team, especially at that time, having people come to us with really urgent needs, especially with COVID and things shutting down. Like, for instance, the whole restaurant industry got upended, and we weren't ready yet to serve the community in that way. So, fast forward to now, we're in a much better position where we have a lot of our programs and our offerings set. we're still a really new and young organization, and we really see ourselves as a learning organization. And there's a lot that we're still learning. We're still learning how to perfect our community investment model. We're still learning how to serve all these different parts of the Black agricultural system. It's not a monolith. There are segments of the system that we're trying to serve where there's still gaps, and we're trying to figure out how to serve. So I hope that answers your question.
That totally answers my question. And I guess a follow-up question I would have is, have you noticed any trends following the 2020, like uprisings, George Floyd, COVID, all that stuff, to 2024? Something we talk about in our organization is that because there was such an influx of capital during that time period, now it seems like there's been a cultural shift or not as much funding going out. So do you have any creative strategies that you've utilized to keep that funding coming in?
Yeah, I would say the biggest creative strategy that we've had from the beginning that's allowed us to do our work and will continue to allow us to do our work is only accepting funding from mission-aligned donors and investors. Because, when you have moments like this where, there are other really important dire emergencies that are happening across the world at this time, and funders want to be able to put their attention elsewhere, you want to make sure that you are working with people that are still going to double down on the commitments that they've made in the beginning, even if the attention isn't fully on this issue, or it's not as trending or not as appealing to be able to focus on this. So a lot of the funders and investors, we really focus on relationship building, and we look at their track records. We look at some of the historical things that they've done or they've not done. And, there have been times where we have said no to money because there was either going to be a mission drift, or, there was going to be a situation where it would put us out of alignment with our mission. And so, it was just very clear from everyone. And I think, as someone who's a first time, fund manager, and was really lucky to have a board of folks who were nonprofit professionals, who are fund professionals, they were able to at least steer me in that direction of, these are the funders who are going to double down. You might want to consider, either trying to negotiate harder with this particular, funder investor, or might want to consider saying no, because these might be the consequences in the future. So I think just making sure the values alignment is there, I think, is super critical.
That's brilliant. Thank you for sharing.
Olivia, I love how you are addressing power kind of at every point. But you also are great at doing landscaping and ecosystem mapping. And you talked about some parts of the system you haven't gone to, but you'd like to, and you see as a gap. Can you tell us where you see gaps in the system, and where you'd like to go in 5 or 10 years, or that somebody else should go?
Yeah, so, particularly within the Black agricultural food system of the Northeast, we are really focused on supporting any size stage business with emergencies. We're really focused on supporting businesses that are, just past the early stage, that are either small or mid-size. Our issue that we're trying to currently figure out how to address right now is people who are aspirational farmers, right? So people who are pre-revenue, who, it would basically be extractive to provide them with a loan, but they still need capital in order to be able to get to that place of running their business. And, the reality with, the type of funding that we provide, we wouldn't be able to provide someone with a $2 million, $1 million gift for them to be able to build out their organization. So the biggest challenge is figuring out, okay, once someone has identified that they're interested in farming, or they've had farming experience before, but there's a significant capital need and you don't want to overburden them with debt, like how do you create a capital stack in order to, level them up. So something that we've been thinking about a lot is, specifically within the term structure, doing things like graduated payments. So we would essentially, start someone off with a lower payment, or things like revenue financing, where they wouldn't have to pay unless they generate revenue. But I think all of this, ultimately, we're able to do this because we have very flexible investors and donors. And so they know this going up front, that we are hoping to be flexible with the folks that we're working with. And in order for us to do that, they need to also be flexible with us. But it's a challenge, and so there's the alternative term structures, but then there's also the pre-TA that we need to do with these businesses to get them ready. But there's a lot of capacity that's needed for pre-TA, and right now in our organization we have one person who is responsible for a TA, and then we also will do some outsourcing with trusted contractors. But there's a significant amount of time that goes into that early stage but high capital needs business that we're still trying to figure out how to address.
So I had a couple questions myself about kind of on the investor side, but I think I'm going to kick it to Michael for those. But I did have one question, because you mentioned a couple times that you're talking about businesses that are mission aligned. What does mission aligned mean for the Black Farmer Fund?
Yeah, that's a great question. So we have 3 pillars in our investment guidelines. So the first is, are you building community wealth in your business, using your business as a tool to build community wealth? Are you hiring people from your community? Are you providing leadership opportunities for community members? Or are you donating a portion of your proceeds to community organizations? Like, what are you doing in order to build the community around you? The other is ecological well-being. So we really, really believe in the need for more climate resilient farms and food businesses. So for the farms, what does climate resilience practices look like to you? Are you practicing sustainable agriculture, regenerative agriculture, whatever buzzword, in there that works towards leaving the earth better than you found it? What are those practices that you're doing? And then for the businesses, how are you mitigating your waste, your byproducts? How are you creating closed loop systems in your business? And then the final one is economic justice. So, this really addresses the racial wealth gap piece. Do you see yourself and understand your context within the broader scope of your business has the potential to work towards closing the racial wealth gap? And are you willing to work towards doing that by working with us, being coachable, and really building an organization that's going to allow you to get there, and allow us as a collective movement to be able to help you get there?
Yeah, love it. Michael, I wanted to toss it back to you for, I know, a couple more questions that you had, and
Yeah,
then we'll open up to audience in a little bit after that.
great. So one of the things I'm very curious about is scale. And obviously, every fund wants to be bigger and better to meet the needs of more people. But many of the funds that we have talked with in this series, and also that we sort of follow both in writing and in various indexes that we publish, they tend to be smaller, more like 3 to 5 million. So you're doing great with $20 million. Is that the right scale? Is that the scale that's needed to sort of pay the bills for the administrators of the fund? And if not, what is the right scale?
Yeah, I really like this question because I've never been asked it before, and I have lots of thoughts on it. I will say that I think that the issue sometimes with scale, especially with funds that are looking to be close to community, is that the larger the fund is, you have 2 choices. You either decide to fund more money to less people, or you fund less money to more people. And if you have more businesses that you're working with, you need more, relationship management capacity, debt management capacity to be able to ensure that you don't become, a cookie cutter institution that is super far removed from what's happening on the ground. And it's really hard to find that balance because you want to be able to give folks as much money as possible. So for our approach, at least with BFF Fund 2.0, we got feedback in one of our pilot funds where we did, $76,000 on average check sizes for both a gift and a loan. And some folks were saying that was not enough. So we scaled up to be able to provide people more money. But with BFF on 2.0, we are going the route of we're focusing on providing less people with more money. So our target amount for the businesses is about 30 to 40 businesses for BFF on 2.0, which is is a small number, but it still allows us to be able to, with the capacity that we have internally, ensure that there's not only like depth, but also breadth in the different program options and people to really be able to feel like they're connected and close to the organization. So yeah, I don't know if there's necessarily a right type of scale. I think it's about what you want to do. And it's been very important to us from the beginning to ensure that there's that close connection. And so, if it were the case where we would want to be able to provide more money to less people, then we would need to add organizational capacity, but we would need to figure out how to do it in a way that doesn't distance the organization from what's happening on the ground. So it's something that we're always thinking about in the organization. So it's a really great question.
Great. And I guess a lot of the people who are either here or will watch this asynchronously are thinking about how can I do something like this in my own backyard, in my own region. So you're focused on the Northeast, and there is a need for this everywhere. Who are the critical initial players that you need to make this happen? Is it a foundation and an economic development agency, for example, or three foundations? How would you characterize that?
Yeah, I would say the critical people are the people who you plan on, providing capital to, right? The ideal situation would be getting experience first as an operator, putting yourself literally in the shoes of the people who you will be, lending or granting or whatever, however you're going to be giving capital to, because it allows you to have that lived experience on the ground. It allows you to make connections with folks from a place of trust because they see that you've also been through what they've been through. That's the most important thing. And then it also allows you to have a close ear to then some of those larger players like the economic development and, the funders, and get feedback from the folks that you're serving as to how those folks are helping or not helping. And through that, you're able to identify what the gaps are and then make a decision as to how you're going to address those gaps. Are you going to go at it alone, or are you going to work towards trying to collaborate and partner with those organizations and go at it together? But first and foremost is, being a farmer, being a restaurant, worker, working in the value chain in some sort of way, getting that lived experience, I think is really critical.
I think that is such an important lesson and so different than most financial institutions.
Yeah.
Joel.
My question, because I like what you just said, Michael, is that like the people who are going to be tuning into this either now or in the future, some of them will be looking at, possibly starting their own fund, but I think a lot of them might also be looking at ways to invest in a more impactful and more regenerative way. So if I was looking to invest in the Black Farmer Fund through the community avenue that you talked about, like how developed is that? What does that look like for an investor? Do you have Is it slow capital? Is it, is there a reduced rate of return typically of what they might get on market rate? Or is that something that's built out yet? Or what do you envision that to look like?
Yeah, so this information is for educational purposes only. It's not a solicitation. But what I will say is that we have 3 different tranches of our notes, and our community wealth building note gets the highest return. They're all below market rates. They get the highest return in the shortest payback period. And I think that for any of our investors, we like our investors to be in a mindset that, this is not Wall Street investing. This is really Main Street investing, and it looks vastly different. And in order for us to be successful and for you to be successful in, the desired impacts that you want to have for your dollars is, one, trusting our leadership. That's first and foremost, trusting our leadership, trusting our decisions, allowing us to do that work. And then, also, 2, being willing to ask the question of what's the risk of not investing, right? So what is the risk of, what's going to happen to this thing that you care about, this issue that you care about if you don't invest, rather than what's the risk of investing. And so switching some of those like beliefs around investing, I think, is what we really like to see for our investors. So yeah, if people are interested in supporting through a community investment note, they can go to our website.
Well, what you just said about thinking about, how the investing is different, but also the kinds of returns are different. I know Michael has written in his books that, that's not just a financial return, but it's a social return. And so it seems like, when people actually can understand that like, hey, the type of return I'm going to get is vastly different because I'm also going to be receiving the community return, in the process. I think that makes total sense. If the way we're going to invest is going to be different, then the returns we're going to get are going to be different. And that's kind of the whole point. So,
yeah.
That's good. So I'm going to open it up to audience questions. I know we have one from the audience right now that I will throw it to Cynthia. If you're still on and able to, you can unmute. Otherwise, I can just kind of read your question here. Give her a couple
go
seconds.
ahead and read it.
Okay. So you said for the community members who are part of the committee or have their voice at the table, are they able to take part in receiving the funds, even though they are the decision makers? And if not, how does the community members receive those funds if they need them?
Yeah, this is a great question because we're currently experiencing this right now. When we created the investment committee, in order to avoid conflict of interest and consolidation of power, we created it so that way the investment committee members wouldn't be able to apply for the funds. But the reality is that they're also practitioners and they're experiencing some of these things, and we're a part of creating an organization that they wanted. So if right now, as a investment committee member, if someone does want to apply for funding, they do have to step down from the investment committee. But that's not a loss to the organization because there's an extreme amount of value for having some of these investment committee members on. So we're trying to figure out a way for us to be able to still support the investment committee members without, conflict of interest or without, unintentionally consolidating some of that power, since they are on the inside as to how decisions are being made. So it's a work in progress.
Great. Can I do a little follow-up with that?
Yeah.
Of course.
Okay, so have you thought about like doing term limits? So if a person who's on the committee might have already received the money at one point, then became a committee member, knowing that then, during that term, they will not be able to receive the funding.
Yeah, we do have term limits. I believe they're either 2 or 3 years right now. And then people can choose to be nominated back on again, or they can cycle off. So that's there, but the reality is that some people, they need money now. So there's that time element that is an issue.
Yeah, I'm here. I wanted to attend this meeting because I have two farmers in upstate New York. My daughter Ashanti is at the Blackyard Farm,
Oh,
and
yeah.
yes, and my daughter Khadija is with Iridescent Collective Farm. Yeah, so
Yeah.
yeah,
Amazing. It's nice to meet you. Yes,
thank
Ashanti's
you.
amazing.
Well, that's great. Do we have any other questions either from the panel or from the audience? I know I've got one last one to kind of like tie things up a little bit here, but I want to give another just a second to Kevin, Michael,
Yeah, just
Stephanie,
the
or Jasmine. Yeah.
yeah, just the consistent focus everywhere you're going on what's the power dynamic and how can we make sure that the voices of folks not at the table are presented here. It's really pretty interesting how consistent you are figuring out where those places are. I really admire it. And it's just admiration.
Thank
Yes.
you.
Yeah, absolutely.
Yeah, just one last question from me, Olivia. I think as we talked about return on investment, one thing that kind of bubbled up for me as an maybe unintended look at that is around stewardship, and being able to pass that knowledge on to new generations. When we think about return on investment and impact, we don't often think about those things that are not tangible. I think sometimes, and certainly stewardship of the land and understanding climate, how climate affects us, and that how that is an asset, I think is a part of what return on investment could be, and just wondered your thoughts about that.
Yeah. There's so many forms of capital, right? There's, financial, there's social, there's intellectual, spiritual, and we try to embody all of those different forms. Sometimes they come in conflict with one another, especially the financial capital comes in conflict with every other form of capital all the time. And so especially when you're thinking about how to build an organization, but then also how to deploy capital, where you're not just focusing on, someone having the perfect balance sheet or the perfect, profit and loss statement, but knowing that, this person is a spiritual leader in their community as well as a farmer. And so how can we support them so that way they can continue doing that work? Right? Or this person is providing education and intellectual capital with their farm, and they don't have a traditional, farm model. How can we support them with that work? Or this person is doing innovative climate practices that are very expensive, and as a result, he's not driving a profit, but he's helping regenerate the planet. How can we support him? I think those are all questions that we incorporate in our process of how do we get to saying yes if possible, even if a business doesn't necessarily look automatically attractive. And again, we're able to do that and have that flexibility to be able to do that because we work with mission aligned investors and donors. I see your hand.
Well,
Jose.
we have a hand up for let's see, Jose.
Yeah, thank you. Thank you so much, Olivia, for this. This is my first time at one of these, and wow, I'm impressed. I'm impressed with how you've done what you've done, but also how well you're able to explain it. Even someone like myself gets it, I think. So the question I have is around the management of the fund, and I'm new to all of this, so it sounds like that's a kind of standard way to do it, to have fund managers or some group administer and decide who gets what. I love the idea of having people in the community be on that committee rather than investors. But I wonder if you or the others know of a model where the investors have a relationship with the folks that are seeking to be funded, and actually have that decision, sort of like a VC model. I'm here in Silicon Valley, and the VC model is, you sort of get to meet who you're going to invest in. You're working with them, you're supporting them, and it becomes a relationship to some degree, as good as it gets in Silicon Valley. And so working in collaboratives, which we're doing here, building new types of organizations that are peer-to-peer organizations, and seeking to grow to a model of investing. That's my question: is do you see that as a potential? Do you know of it, and do you think it could work?
Yeah, I think I think there are many instances in which it could work, and I think there are many instances in which it would be super hard to do that because of, and I'll say this for the 100th time, the power dynamic at play. Especially when you're thinking about, supporting communities that have been marginalized and who have maybe in the past gone directly to, some of these capital holders or capital allocators in the past and haven't received, the same level of reception. And that's why I think that it's really powerful to see, the increase of diverse fund managers. So in your space, the first thing that comes to mind is Harlem Capital, and how, Harlem Capital is a VC fund, that is run by, men of color, women of color, and who are investors and directly, communicating with and supporting, the businesses that they're looking to serve. And so I think being able to have investors who've had lived experiences, I've seen it work well. I think the challenge is when an investor doesn't have lived experience, it just can be challenging to be able to relate. And what's happening now a lot in order to address that is that there's a lot of investor organizing that's happening. So a lot of investors are getting more politicized. There are different groups that are doing that. For instance, there's an organization called Life that's supporting specifically food investors. And there are other forms of, professional service organizations that are supporting investors. So being able to tap into communities of practice that are helping you get more politicized and understand, how to be able to relate to disadvantaged or marginalized communities, I think is the first step before then, reaching out and looking to connect with, with folks in that particular case. So I hope that's helpful.
I'll just toss in, I've seen a structure that can work as non-voting Class B shares for those investors, which just means you got to put up the money and shut up. I was working with an imam on an Islamic co-op, and typically they get preferred shares, means they get their money first. And the imam said, no, that's as bad as usury. That's having the investor have more power, get the money first. And it's like, oh, you're right. So non-voting Class B is a way to seed power, come in and shut up. It's an interesting structure.
Yeah. Well, thank you so much for your time today, Olivia. I've learned a ton. I feel like I've really kind of a lot of light bulbs have been going off. I've seen on for me, and I've seen on other people's faces here too. Thank you so much for your time, and thank you for all of you who joined today. This was the largest audience that we've had so far, so a little round of applause for that. And just so you guys know where you can find the rest of this. So Community Capital, as you said, is a partnership of several organizations. So you can find links to the events and to the backlog through the Main Street Journal, through Neighborhood Economics, and through the mindfulmarketplace.com. If you want to subscribe to the backlog and be able to view all of the old episodes that we've done and have it show up in your feed whenever one is posted, just go to youtube.com and search Mindful Marketplace Show. And it's on that YouTube page. You can subscribe right there, and you can watch. There's a playlist. You can watch all the backlog in. But until next time, make sure everyone to take care of yourselves, take care of someone else, and take care of your community.